Now let's do some trading with Scott Bauer, CEO of Prosper Trading Academy. Hey there, Scott. Great to have you with us. How would you trade Applied Materials ahead of earnings? It's currently up about 1% right now.
Yeah, as Jeff was saying, I think you look at the charts, and this is a real tough one to decipher. But I think it's up this morning just on the maybe on the coattails of the Cisco results. And I'm pretty bearish, actually. I'm bearish overall. I think that supply chain issues are going to be tough. So I'm buying just a simple put spread going into earnings. I'm going out a couple weeks, so it gives this a little time. I'm using the September 2nd expiration. I'm buying the 105 put. I'm selling the 100 put. Want to do that for about $1.50 or so. So my break even at September expiration is 103.50. If the stock rallies or just doesn't move down at all, I know what my risk is. It's $1.50. But I think that there's a lot of downside pressure, and for me to see this stock rally, to see this on the upside, they've got to give some pretty incredible guidance, in my opinion. I just don't see that happen.
So downside pressure specific to Applied Materials, or is this a call on the overall space in terms of...
I think it's on the overall space right now. Yeah, it's on the overall sector, at least over the next quarter or so. The supply chain constraints have really not only have they not gone away, I don't think they've eased very much. And I think that's going to be an issue. I think that's going to drag on the sector over the next quarter or so.
Scott, I also just want to get your take on trading activity, what we've seen, especially given the away from the semi space and just overall. But, we're starting to see a lot more risk-on appetite. We're seeing a lot of interest in meme stocks and such. What's the takeaway there from you?
So for me, if someone wants to be long in the market right now, which I don't mind that at all, the key to me is to buy that cheap protection. And with the VIX trading as low as it's traded in, essentially 6 months, and yeah, it's up a little bit off of the bottom of the 19 handle that we saw. To me, that's a perfect opportunity to be able to buy some cheap downside protection in the market, especially if you've got some long positions here. So, I don't think that having long positions is a bad thing whatsoever, but I'm an insurance kind of guy. I'm a very conservative trader, and I think this is a great opportunity to just be able to hedge some of that with the cheapest volatility that we've seen in about 6 months.
I just want to ask you quickly, not to put you on the spot, but just in terms of Bed Bath & Beyond, we're seeing that fall 27% today. Obviously, there's the news that Ryan Cohen intends to sell his stake. Not sure if he has actually sold his stake. So looking at that from a trader's perspective, did the traders who dumped all the money into Bed Bath & Beyond to push it up, 230% this month, get it wrong?
Yes, I quite frankly, I think they did. With the whole risk on appetite of the marketplace, you're seeing that the Reddits, the memes, all over again. And yeah, I think they did get it wrong. Now, this may abate, right? Give this a day or two. We may see this thing trading 25 again after the shock of the Ryan Cohen news kind of subsides a little bit. But yes, they got it wrong, in my opinion.
All right, we'll leave it there. Scott Bauer, CEO of Prosper Trading Academy. Thanks so much.
Thank you.